Hello and welcome again to Stocks Advisor. Today we will talk about the company named $3 Incorporated, ticker name DLTR, traded at Nasdaq. Well, this is a company that was observing some, let's say, downwards move and negative waves. In this case, two cascaded waves starting from the, let's say, beginning of May of this year. First, we went from the level of 115 to the level of about 100, and then we declined recently to 90. And today's white candle is showing a lot of possibility and promise, because if you look more careful here, you can see that actually there are several things being very interesting. First of all, MACD histogram is now turning to upwards move, so it might create more and more positive pressure, especially when it will be near to piercing upwards. RSI is quite also, there are many new people entering without profit, so that means that, let's say, viscosity of flow increases and any spike is possible as well. And we are quite low from moving averages. This is also a very good parameter that usually is not, let's say, discussed, although taken into account with professionals. If you have very small angle, let's say almost flat move of your moving average, because if it's a very sharp decline, very steep, it means that you are just on the really dynamic decline, the price might go lower. But when it's quite smooth, it creates actually quite positive pressure upwards, especially if there's big difference between the current price level and moving average. Like here, for example, you see by June, the difference was really high. Of course, you need to have big difference, more than 10%, usually around 15. Here you can see it from 10 to 15% was taking place. That caused the price to bounce back. And here today at the opening, we were almost at 10%. By the end of the day, we are actually at around 6% difference from moving averages. But also if you look to moving average 200, we are about 12%. So it's not super strong upwards pressure, but it is there as well. I mean, the pressure that is coming from distance between the moving averages and the current price. But the bar of today, the candle is quite high. It means that there could be so-called recharge decline, meaning 1 or 2 days, most probably today, next day, since it's a Friday, end of trading week, and Monday, might be two small doji-like red candles, similar to one we observed here. But here it took longer time. Here we had several small candles declining, and then the step up was taking place. So this kind of zigzagging also might take place here, and that would be our strategy to enter first. So now let's talk how we buy, because we expect the zigzagging. I would say the first entry level would be very nice to take between 91.03 and actually 92.74. This would be the first so-called first technical level where we can buy, and then at the rebounds we should go at least to the moving average 20, which works usually as a resist level in these cases. And here, given this layout, it should be up to, let's say, 10% profitability for this position. At the current level, of course, it could also break out higher, going to 1000, but this would be more for midterm traders. In general, let's say midterm level of 105 would be very feasible. But if you are a daily trader let's say just trading with few days and then exiting, maybe taking up to 10% profit should be just right enough. So let's first of all write here a profit taking advice, let's say would be from 8 to 10% from the money allocated in the position. And then once you can do it, of course, you can wait for more, but then it's up to you. And risks will be increasing. But as I said, for midterm, 105, which is more profit, should be feasible as well. So this is the first level to enter. Let's write our first call out, so the first technical level. And then we will talk about second one. If you want to know more about what do we mean by saying first and second technical levels, actually then you need to watch the video explaining the theory of trading that we follow here. And this video you can find in the description of the video of $3. Lower there is a link. Please check it, then you will understand more what do we mean and how we actually trade at our channel. So this is the first technical level. from where we expect the price to, let's say, bounce up at least all the way to moving average 20. And then if this is not working, also possible it might decline further. Then we need to prepare to buy at the second level. And the second level will be starting exactly here, formed by inflection point at June of previous year and also by September, October action of previous year as well. So we really need to look in the history further, and this would be the level. So it will be between 83.59 to 85.50. So-called second technical level, from where again, if you buy non-linearly more and more, the price should rebound, allowing you to take the profit target, which would be in this case, I repeat, 8 to 10% from the money allocated in the position. So this is the second level to buy. And the third level, we always keep it for risk mitigation due to negative catalyst. So what does it mean? It's the level that it's not seen from technicality, from the chart analysis, but it can be happening if, simply speaking, bad news comes, and we call it negative catalyst because it can be not only bad news, it could be anything related to the company, to the sector, or this economics, or could be even the global stuff. The recent global example was the COVID of previous year, April price decline. All stocks almost went down. So this was a nice example of negative catalyst due to global effects. So all these we need to take into account, and it's not that we prepared to buy there. I mean, we are prepared. It's not that we are expecting this, but we need to be prepared to buy there because we don't do any stop loss. We just want to buy and be ready to rebound and make the profit. And therefore, this will be the price action formed here. You can see this would mean between 66 and 76.29. So it's just a portion of money we will keep to buy if the price suddenly declines there, because we are not doing any stop loss. We just, let's say, wait a bit longer and buy through, because the idea of stop loss is to buy your time with money. And here we are okay to wait a little bit so we can buy money with time, actually, because we do non-linear averaging down. So these are 3 levels to buy through. And now let's speak how to buy, because we do it non-linearly. And here, since the lower levels are not that probable to be taking place, we can take a little bit more safe approach, meaning that it's not a 5 portion as usually we do, but a 4 portion play. So the money you would like to play here, you can actually split in 4 portions, and then you can buy with 1 portion at the first level. If the price declines to the second one, you can buy there again with 1 portion, and just 2 portions you keep for the lower levels if needed to buy through there. This way, actually, it would be very nice profit to risk optimization for this case. So this is the way to trade with $3. At the moment, again, could be a little bit declining few days within the size of the first level and then spiking upwards. If not, then the second level should definitely work according to this analysis. So if you like this way of trading, don't forget to subscribe to our channel. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. And with this being said, good luck with $3 and see you at another episode of Stocks Advisor channel.